The market is starting to crack. Here's why. Last week, the U.S. economy added 172,000 jobs, nearly double what analysts expected, and the stock market dropped. If that doesn't make sense to you, good, because that's exactly what we're unpacking today. I'm going to go over 4 real cracks forming in the market right now, and then go over some major market news that's about to happen in June. The SpaceX IPO everyone is losing their minds over, and what Bitcoin's brutal sell-off is actually telling us about the future of money, even if you don't invest in Bitcoin at all. By the end, you'll see the full picture and know exactly what to watch out for in June. The jobs paradox. So, why did good jobs news tank the market? Simple version. The Fed has been the market's best friend for years, cutting rates, making it cheap to borrow, pushing investors into stocks. But the Fed only cuts when the economy looks weak. Strong jobs data means no emergency, no cuts, and that's the problem. Think of the Fed as a doctor and rate cuts as medicine. A strong jobs report is the doctor saying, you don't need this yet. Great for long-term health, painful right now. Morgan Stanley's chief economist said it directly. The Fed is watching and waiting, and cuts are not on the near-term horizon. Goldman Sachs went further, saying this report could tip the Fed toward planning a rate hike later this year. Not a cut, a hike. That's the environment we're in. Now, the 4 cracks that's happening in the market right now. But before that, if you like more content like this, make sure to hit that subscribe button so you don't miss out on future videos like this one. And I hope you enjoy the rest of this video. That jobs report is just the backdrop. Here are the 4 real cracks you need to understand right now. None of these exist in isolation. They're all connected. Crack 1 is bond yields. The 10-year Treasury hit 4.55% last Friday, with the 30-year above 5%. Here's why that matters. If the government is offering you a guaranteed 4.55% return with almost zero risk, why put your money into volatile stocks? Millions of investors are asking that right now and moving out of equities into bonds. When that happens at scale, stock prices fall. Crack 2 is AI. The AI rally has been running on 2 engines, excitement and earnings beats. Now, just meeting expectations isn't enough. Broadcom reported this week, and the market shrugged. Valuations are already pricing in perfection. This is multiple compression. Think of it like a movie that's been hyped for 2 years. By the time it releases, your expectations are so high that even a great film feels underwhelming. That's exactly what's happening with AI stocks. The price you're paying today already assumes everything goes perfectly. Massive growth, no slowdowns, no competition. That optimism is already baked in. So when a company like Broadcom reports good numbers, the stock doesn't move because good was already expected. To actually push the stock higher at this point, these companies need to deliver something truly jaw-dropping every single quarter. Good isn't good enough anymore. Spectacular is the new baseline. Crack 3 is oil and geopolitics. The Middle East conflict has been pushing oil higher all year. Higher oil means higher inflation, which means the Fed can't cut and may have to hike. Oil up, inflation up, Fed stuck, stocks under pressure. This isn't going away quickly. Crack 4, and this is the most telling, even good data is sending the market lower. When good news causes sell-offs, the market is fragile. Charles Schwab's latest fixed income outlook puts it plainly. Inflation remains sticky, the Fed stays patient, and yields have more room to rise than fall. Prepare for that reality. Now, the thing every investor is asking about, SpaceX IPO. SpaceX goes public June 12th on the NASDAQ under SPXC, priced at $135 per share, targeting a $1.77 trillion valuation, the largest IPO in U.S. history, bigger than Saudi Aramco. Genuinely remarkable, but look at the actual numbers before you get swept up. SpaceX has roughly $18 billion in revenue, At $1.77 trillion, that's approximately 98 times price to sales. A healthy PS ratio is under 2. A high one is above 4. NVIDIA at peak AI frenzy was around 25 to 30 times. SpaceX is at nearly 100. You're not paying for what the company is. You're paying for what people believe it could become. To be fair, there's a real business here. Starlink makes up about 58% of SpaceX's revenue, and it's growing. Recurring satellite subscriptions are essentially a utility. Once those satellites are in orbit, they print money. The defense contracts, the launch dominance, Starship's potential, these are real. The story isn't fake. The question is whether $1.77 trillion is the right price today. History offers a warning. Rivian went public at a massive valuation, rode the hype, and collapsed. SpaceX is a fundamentally better business, but IPO day is not a smart entry point. Even Amazon's IPO was chaotic. Long-term holders won. Day one buyers got shaken out first. Also worth noting, Elon Musk retains over 82% voting control after this offering. You're buying economic exposure, not real influence over the company. The smart play for most people? ETFs. There are solid funds that give you meaningful SpaceX exposure without forcing you to pay the maximum hype premium on day one. You don't need to buy on launch day to benefit from this company's growth. Patience is a strategy. Okay, now let's talk about the asset that's getting absolutely punished, Bitcoin. Bitcoin dropped to around $64,000 this week, over 50% below its all-time high near $126,000 from October 2025. The headlines are making it sound like the end. It's not, but you need to understand why it's falling, because this is beyond just Bitcoin. It's about money itself. The biggest psychological blow came from MicroStrategy, now called Strategy. On June 1st, they disclosed they sold 32 Bitcoin to fund preferred stock distributions. That's $2.5 million, pocket change compared to their total holdings. But Michael Saylor built his entire public persona around never selling, not one coin. That narrative gave big institutions confidence. One sale ended the streak, and the market reacted not to the size of the sale, but to the story breaking. It's like Warren Buffett selling 10 shares of Apple. The dollar amount is irrelevant, but if Buffett's selling, people panic. That's what happened here. On top of that, Bitcoin ETFs saw over $3 billion in outflows as capital rotated into AI names, and a large Mt. Gox wallet transfer added more fear to an already nervous market. But here's what most people are missing. The same week Bitcoin was crashing, JP Morgan, Bank of America, and Citigroup announced plans to launch a shared tokenized deposit network by early 2027, running on blockchain, offering 24/7 instant settlement. These are the same banks that spent years calling Bitcoin a fraud. Now they're building on the technology. When the biggest financial institutions stop trying to kill something and start copying it instead, that something has already won. This doesn't make Bitcoin's price go up tomorrow, but it confirms the long-term thesis. The technology is real. The adoption is happening. The price is short-term noise, but only if you understand why you own it. If you don't have a clear answer to that question, this dip will shake you out. If you do understand it, this is just another moment in a volatile asset's history. Here's your June roadmap. Write these down. They will move the market. June 10th, CPI inflation report, the single most important data point for the next 90 days. If inflation comes in hot, possible with oil elevated and geopolitical tension high, rate hike talk becomes front and center. If it cools, the market breathes. One number, massive implications. June 17th, Kevin Warsh's first Fed press conference as chair. New Fed chairs set the tone for how the institution communicates for years. Markets don't just trade on what he decides, they trade on how he says it. Watch the language around rate paths and inflation tolerance. Expect large intraday swings in stocks, bonds, and the dollar. June 27th, core PCE inflation, the Fed's preferred inflation measure, the one they actually make decisions with. It closes out the month and tells you whether the summer is going to be a relief or a grind. 3 dates, everything else in June is noise. Which of these 4 cracks concerns you most? Drop a comment. And make sure to watch this video if you want to learn more about the AI and quantum boom that's happening right now.